All right, everyone, listen up. Whether you're a seasoned investor or just starting to think about your financial future, this is something you'll want to pay attention to. Today is November 11th, 2025, and we need to talk about your money and your future. The financial world is buzzing, and there's a major prediction making headlines right now. UBS, one of the world's largest and most respected banks, predicts the S&P 500 index could soar to 7,500 by the end of 2026. That's a huge leap from where we are today, and it's got a lot of people talking. Think of the S&P 500 as a giant basket holding 500 of the largest U.S. companies. It's like a snapshot of the American economy, showing how the biggest players are performing. When UBS says this index will climb, it's a big deal. A financial weather forecast predicting sunny days for investors. It's not just a number, it's a signal that optimism is in the air. But don't just take this headline and run with it. It's easy to get caught up in the excitement, but it's even more important to understand the why behind the number. My goal is to break this down for you, so you can make smart, informed decisions. We'll look at what's driving this prediction, and what it could mean for your investments. We'll explore why UBS is optimistic, focusing on technology companies and economic expectations. The tech sector, in particular, is playing a huge role in this outlook. A prediction is an educated guess based on data. You need to understand the reasoning to decide if you believe in this potential future. It's about looking at the facts, not just the forecasts. Knowledge is power, especially when it comes to your money. The more you know, the better choices you can make for yourself and your family. Don't get swept up in excitement or fear. Financial markets can be volatile and predictions can change. Staying calm and informed is your best strategy. This UBS information is a tool, one piece of your financial puzzle. Use it wisely, and remember, it's just one perspective among many. By the end of our talk, you'll be more confident and prepared to master your financial destiny. Let's dive in and see what this prediction really means for you. Let's get to the heart of the matter. When it comes to understanding the stock market, there's one factor that stands above the rest. Why does UBS think the S&P 500 will reach 7,500? What's driving this bold prediction? The key word is earnings. Earnings are the lifeblood of any company, and ultimately, of the entire stock market. When you buy a share of a company's stock, you're not just buying a ticker symbol, you're buying a piece of that business, with a claim on its future profits. You want it to be profitable. After all, a company that consistently earns money is more likely to reward its shareholders. The money a company makes after paying its bills is its earnings. This is what's left over for growth, reinvestment, or paying dividends. Strong earnings drive stock prices higher. When companies report better than expected profits, investors take notice, and demand for those stocks rises. UBS forecasts a 14% earnings growth for S&P 500 companies in 2026. That's a significant jump, and it's not just a random guess. It's based on careful analysis of business trends, economic conditions, and company performance. They predict prices will rise because businesses are expected to become more profitable. As profits grow, so does the value of the companies themselves. This is a healthier reason for market growth than mere speculation or hype. It's rooted in real, measurable financial performance. Imagine you own a bakery. Every loaf of bread you sell, every pastry you make, adds to your bottom line. If your profit grows, your business becomes more valuable. Investors would be willing to pay more for a share of your bakery if they see your earnings rising year after year. The stock market works similarly. When companies across the board are making more money, the entire market tends to rise. UBS sees a significant leap in profits for these companies, fueling their high target for the index. This isn't just optimism. It's a reflection of real business momentum. It's about the bottom line, not valuation expansion, which means paying more for the same earnings. UBS is betting on actual growth, not just higher prices for the same results. UBS believes earnings growth will be so strong it will offset any valuation negatives. Even if investors become more cautious, rising profits can keep the market moving up. This is a sign of a mature, healthy bull market, not one built on speculation. It's growth you can measure, not just hope for. Remember, earnings, earnings, earnings. That's the engine that drives the market forward year after year. UBS's confidence in earnings growth is the foundation of their prediction. They're not just looking at charts, they're looking at the real money companies are making. This growth is expected to come from the earnings themselves, not just market hype or investor excitement. It's about real results. A company that makes more money becomes more valuable, and that's what UBS is banking on. It's a simple formula, but it's the one that works. This is why earnings are the key to understanding this prediction. If you want to know where the market is headed, always follow the earnings. Earnings growth is the engine, and technology is in the driver's seat. UBS predicts nearly half of the 14% earnings growth will come from tech. These companies dominate with global reach, profit margins, and innovation. UBS bets this trend will accelerate, boosting the market. While tech leads, UBS expects a broader rally with cyclicals like manufacturing and retail joining. For investors, this means understanding your tech exposure and diversifying. Tech is the star, but a strong supporting cast is essential. The journey to 7,500 won't be smooth. UBS describes the economic outlook as a tale of two halves. The first half might be rocky, with a soft patch in advanced economies. Tariffs and other factors could slow growth, causing market volatility. Your discipline will be tested. Don't panic at the first sign of trouble. The second half is where optimism kicks in, with accelerating global growth. Confidence among consumers and businesses will improve, creating a growth cycle. UBS points to potential fiscal stimulus as a boost. Economies expand and contract. Don't get shaken out during contraction. A period of slowness is an opportunity to invest at lower prices. UBS's forecast suggests bumps in the road but stronger growth ahead. Patience is a necessity in investing. This forecast is a reminder to keep your eyes on the horizon. A long-term plan is your best tool. Stay focused on the bigger picture. Investing is a global game, but UBS sees the US leading the charge in the years ahead, setting the pace for markets worldwide. They predict US stocks will deliver impressive 10% returns in 2026, outpacing many other developed markets. This confidence stems from robust corporate earnings and the relentless drive of American technology. The US is home to dominant, profitable tech companies that are not just growing, but shaping the future of global business and innovation. American innovation and resilience give the S&P 500 an edge, helping it weather storms and seize new opportunities. The U.S. economy is vast, diverse, and has a proven track record of bouncing back from challenges, whether economic, political, or technological. UBS's forecast for stronger growth later in 2026 highlights this enduring strength and adaptability. Global investors often look to the U.S. as a cornerstone of their portfolios, drawn by its stability and leadership in innovation. While international diversification is important for managing risk, the U.S. is expected to be the main engine of returns for years to come. The prediction of U.S. outperformance is a vote of confidence in its economic engine, its companies, and its people. Innovation, corporate strength, and resilience make the U.S. especially attractive for equity investors seeking growth and stability. This doesn't mean ignoring the rest of the world, but the U.S. should be a core part of your portfolio, anchoring your long-term strategy. The U.S. market is the superstar, but international markets are the supporting cast, adding balance and opportunity. A strong U.S. allocation is critical for most American investors, providing both growth potential and a sense of security. As we look to 2026, the U.S. is expected to remain the place to be for equity investors, leading the way in a rapidly changing world. While the U.S. is expected to lead, UBS has views on Europe and emerging markets. They predict 8% returns for these regions, solid but below the U.S. The gap is due to market composition. They lack high-growth tech giants. Emerging markets have potential but come with higher risks. UBS suggests these markets will benefit from global growth, but not as strongly as the U.S. International diversification is important, but the U.S. is the main engine. Think of the U.S. as the superstar and international markets as the supporting cast. A balanced portfolio includes both, but the U.S. is expected to drive returns. Stocks or bonds? UBS favors equities for 2026. Equities offer better risk-reward than bonds, which are safer but offer lower returns. Stocks are riskier but have higher growth potential. UBS's forecast suggests a favorable environment for stocks with strong earnings growth. The potential reward of stocks outweighs the risk compared to bonds. This doesn't mean selling all bonds. They provide stability and income. Bonds are crucial for a diversified portfolio, especially near retirement. For growth, stocks are the superior choice for 2026. It's a green light for the growth-oriented part of your plan. Balance risk and reward based on your goals and comfort level. Stocks offer a better potential payoff in the year ahead. We've covered the prediction details. Now, what does it mean for you? You need a plan. Don't invest based on a single headline. If you're investing long-term in diversified funds, this forecast boosts confidence. If you're hesitant, this is a wake-up call to get your money working. Start small, automate investments, and diversify your portfolio. Review your portfolio for proper diversification and exposure to different sectors. Check your timeline. A soft patch could be a buying opportunity. Nearing retirement? Ensure the right mix of stocks and bonds. Ignore the noise. Focus on the bigger picture. You're investing for 2026 and beyond. A long-term plan, consistently executed, is powerful. This forecast supports the timeless truth of long-term investing. Stay the course and focus on your financial goals. The future is coming, and you have the power to be ready. What's my verdict on the UBS forecast? I approve of understanding it. Use it to become a smarter, informed investor. Recognize the power of corporate earnings and American innovation. The number 7,500 is just a number. Focus on underlying trends. Denied. Trying to time the market or thinking investing is easy. Volatility and setbacks are part of the journey. Your financial plan is pending your action. If you have a plan, stick with it. If not, make one today. Use the forecast for education and motivation. You're the CEO of your life. Make decisions from strength and knowledge. The future is coming, and you have the power to be ready. Be the master of your money. This forecast is a tool, not a guarantee. Stay informed, stay committed, and stay diversified. You can do this.